Coming up on Market to Market, the trade war squeezes rural Main Street. The demand for a Southwest specialty crop is heating up.
I was planted, after.
And market analysis with Jeff French next.
All right now, but we need.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, September 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The last 11 years of economic growth have been built on the backs of consumers, but the trade war with China may keep the U.S. economy from extending the run. The Institute for Supply Management says factory production and new orders in August shrank for the first time in 3 years. In the Midwest, Creighton University's Mid-America Business Conditions Index dropped below growth neutral for the same period. According to the Fed's Beige Book, concerns over tariff and trade policies are causing some uncertainty, but the majority of businesses remain optimistic. The hiring of 20,000 new government employees to handle the 2020 census pushed the number of jobs created to 130,000 in August. The unemployment rate held steady at 3.7%. The tariff war with China has narrowed the trade gap, but the fallout has been a cut to farm income. The Nebraska Farm Bureau estimates the state's farmers will lose nearly $1 billion this year, and they're not alone. Peter Tubbs has more.
This week, American consumers began paying a 15% tariff on $113 billion worth of consumer goods that are manufactured in China. Even as the trade war ratcheted up, both sides agreed to another round of talks.
With tax 122.06.
The new American tariffs cover 3,200 product categories manufactured in China and affect items ranging from smartwatches and flat panel televisions to virtually all clothing and footwear. The American consumer has largely escaped paying tariffs on imports from China, but that has now changed. 69% of the consumer goods imported from China are now tariffed. If the additional threatened tariffs take effect in December, $550 billion in Chinese imports will have an additional tax. China retaliated with $75 billion worth of tariffs on goods originating in the United States. These duties cover agricultural products like fish, nuts, and barley, as well as certain metals and chemicals used in manufacturing. Some analysts believe the now 14-month-long trade struggle has pushed both the American and global economy closer to a recession. The two sides have agreed to resume discussions in October. The meeting will be the 13th round of trade talks. The USDA believes the first round of market facilitation payments are hitting producers' mailboxes. The payments, intended by the White House to offset the impact of tariffs on American commodities, doled out $12 billion in support in 2018 and may spend as much as $16 billion in 2019.
Last year, I gave the farmers $16 billion out of tariffs. The year before that, because they were targeted by China. The year before that, I gave our farmers $12 billion. And the way we figured that, I said, how badly have our farmers been hit by targeting from China? And I was told they were hit to the tune of $16 billion. And I made up that $16 dollar for dollar to the farmers. So the farmers are extremely happy, and they also know, and they're warriors, they also know we have to do this with China. We can't let this go on.
From Market to Market, I'm Peter Tubbs.
The different levels of zip that chilies add to a meal have been analyzed in much the same manner as fine wines and boutique coffees. Chili connoisseurs will be the first to tell you it really is all about where the raw commodity is grown. Josh Bittner has more in our cover story.
In the land of enchantment, New Mexico's signature farm commodity casts a spell on the taste buds, sparking a fiery debate.
So the big question, red or green?
Green.
Red.
Chili peppers, green or red, have enriched the southwestern palate for longer than apple pie has been American.
We let it tumble in there and the skin just comes right off.
Every year, tourists flock to the small town of Hatch, New Mexico, the self-proclaimed green chili capital of the world, to celebrate and devour a fresh harvest.
Green chilies make everything better.
Oh yeah, we eat them on everything.
The crop, which turns from green to red the longer it stays on the vine, is entwined with local identity. Hanging ristras are symbols of health and good luck. And New Mexico has enjoyed good fortune as the national leader in chili pepper production.
I think the impact, there's twofold. One is economic and one is cultural. So
Dr. Jay Lillywhite, an agricultural economist with New Mexico State University, says the state contributed 53% of domestic production in 2018, valued just south of $100 million.
that includes the processors, the dryers, the canning companies, as well as the producers themselves, and any backward linkages. So that also accounts for fertilizer dealers and manufacturers, that kind of thing.
Lillywhite adds that New Mexican chili production has dropped from 35,000 acres in the early 1990s down to just under 8,000 today. And with pressure from other states and Mexico, some are digging deeper as a buffer against competition.
There's only so much chili that can be grown in the Hatch region, or only so much chili that can be grown in New Mexico. And as that demand continues to increase, if you can actually build a marketing campaign around that, there will obviously be premiums.
Hatch Valley farmers have adopted a distinct branding strategy to distinguish their product from a host of others. Adjacent to the Rio Grande, the region has long been hailed for its unique blend of favorable soil and climate conditions.
The Hatch Valley here in southern New Mexico has become synonymous with high-quality green chili.
Preston Mitchell contracts with local growers and estimates 2019 yields will average 15 to 20 tons per acre. In previous years, prices have ranged from $500 to over $600 per ton for green varieties.
You can hear that nice crisp pop as it pops open. Tear that pod open and you'll see just a thin little yellow strip running up that vein, and that's the capsaicin in the pod that you taste as heat.
Labor costs can bite into profits because harvest is done by hand. Mitchell says finding workers is a challenge in itself, while mechanization, long rumored, remains elusive, and drought, on average, abundant.
95% of the water that fills up Elephant Butte comes from snowpack runoff. And we just haven't had it since 2003 on a regular basis. We may have one good year, maybe two, and then nothing.
Elephant Butte Irrigation District covers over 90,000 acres of irrigable land in southern New Mexico. Manager Gary Esslinger says the past couple of years have been a roller coaster ride. Drought-driven low water levels in reservoirs on the Rio Grande north of Hatch forced ratepayer allotments down from an average 3 acre-feet to just 10 inches in 2018. But this past winter's snowpack rebound, slow thaw, and late irrigation season start saw grower allotments swell to 14 acre-feet. While still not to full capacity, Esslinger says history indicates an average of 40 years between reservoir overspills. And a complicated set of decades-old agreements also legally require the utility to satisfy surface water deliveries downstream first, to Texas and Mexico.
Certainly we have to abide by the law and yet try our best to supply the water that's necessary to these farms. It's a constant battle. And the litigation is always flowing here. It never stops.
EBID has been at the center of legal wrangling between the federal government, Colorado, New Mexico, and Texas for over a decade in regards to water rights under the Rio Grande Compact Agreement. After going before the U.S. Supreme Court this year, the outcome of the case remains in legal limbo as all players continue to push for their side to prevail. Esslinger adds new stakeholders, ushered in by recent population booms, are unfamiliar and unwilling to compromise with water laws drawn up over 80 years ago.
It's the public at large that really doesn't understand the complexity of how we have to operate down here. It's real easy for me to explain to a farmer what's going on because of the drought, because most of these farmers have been here 3 and 4 generations, some of them even 5.
My great-great-grandfather is actually credited with being the first chili farmer in the Hatch Valley. His name was Giuseppe Franzoi, and he was an immigrant from Austria.
Preston Mitchell says even though winter's weather reprieve resulted in increased surface water allocation this year, farmers still pumped a majority of groundwater to irrigate crops. And over time, only salty, brackish water is left in uncharged aquifers, which makes an infusion of fresh Rio Grande River water essential.
Drought is a major concern to growers in this area.
Just like producers of higher volume commodities, Mitchell has diversified to remain profitable. Expanded acres, processing, and roasting chilies are all part of the mix. As word spreads and orders for Hatch Valley green chilies come in from across the globe, Mitchell reiterates regional branding as a vital ingredient for future growth.
Hatch chili is sought for by buyers at grocery stores such that they will not take chili from elsewhere. So it kind of allows us to have this little niche within the overall green chili market and continue to farm and continue to be able to farm profitably.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The markets reacted in different ways to this week's trade war news. Stocks went up and commodities went down. For the week, December wheat was flat, while the nearby corn contract fell 14 cents. Weather and news of October trade talks with China did little to interest traders as the November soybean contract fell 11 cents. December meal dropped $2.30 per ton. December cotton lost a quarter per hundredweight. Over in the dairy parlor, October Class 3 milk futures gained 10 cents. The livestock sector ended mixed as October cattle shed 405, October feeders put on a dime, and the October lean hog contract cut 3 cents. In the currency markets, the U.S. dollar index lost 48 ticks. October crude oil added $1.61 per barrel. COMEX gold fell $16.60 per ounce. And the Goldman Sachs Commodity Index gained more than 7 points to finish at 403.95. Joining us now to offer insight on these and other trends is market analyst Jeff French. Jeff, welcome to the Market to Market table.
Thanks for having me.
Jeff, let's start out here with a social media question we got from Pete in East Troy, Wisconsin. He wants to know, at what point are we going to see the wheat market buying acres for 2020?
Well, I think it's when the U.S. dollar stops its rally. This week, the U.S. dollar is at a 3-year high. It's been rallying now for 7 to 8 months. That's a flight to safety. It is the strongest dollar in the world, but there are some dryness concerns in Australia regarding the wheat. But then you also had Ukraine out a week ago saying that they potentially could have 3 to 4 million metric tons more to export. So right now, the wheat market is, trying to discourage acres. And I think that really flips when the U.S. dollar stops its rally.
And one thing that we saw this week were some acre expectations for corn and soybeans for the 2020 growing season. Crazy to think that we're already talking about that. But the market factoring in a number of a bigger corn acre for next year yet?
Yeah, I mean, when you look at the economics of it, the market right now, Dees 2020 $4 corn pencils out better than what the beans are right now. Beans $9.30 minus your basis locally here, probably 90 cents to $1. So yeah, the projections, right now the early projections are for 94 million acres of corn. So we'll see if that actually happens.
And that's going to be something crazy to watch, Jeff, as we look at that number, that huge number coming down the pipeline potentially for 2020. How much of a cap does that put on any sort of rally we're going to see for this growing season once things are starting to get rolling in the combines?
Well, I mean, the focus right now of the market is for this new crop because we don't know what's out there. I mean, we've seen some guesstimates and we've seen some surveys, but right now 90 million acres of corn. We'll see. The USDA has us at 91% harvested. I think that's a very aggressive number considering The late year that we had in 1993, we harvested 86% of planted acres. So we could lose some acres just from not harvesting them, but we're going to find out a lot here moving forward once the combines start rolling.
And I think that's the big question, especially in the corn market, on the minds of so many producers, is we're hearing varied numbers from the USDA versus private estimates on what yield is actually going to be. If we do get a higher yield number, 165, 167, 169, does that give us much upside potential?
It does, but it doesn't change the fact that demand right now has just been gutted. But yeah, it would be friendly. I mean, the trade expects a bushel or two drop next week in the September report. They also expected that in the August report, a drop in, and they actually got an increase in yield, an increase in acreage as well. So let the market do what it wants to do. If I was sitting here with a bunch of unpriced grain going through the report, I would definitely make sure I have it protected. There's these weekly options that are, pennies, because, what you want to do is hedge for the unexpected. And, the sell-off looks like it is run its course. It's exhausted, but it definitely could take another leg lower.
Was the sell-off what we were looking at here in the corn markets as they touched some contract lows?
Yeah, we hit contract lows here today, down to 353. We bounced a little bit going into the close, but not a good way to begin September. The funds continue to pile in on the short side. It's estimated they're short probably 150,000 contracts. So you take out 353, you go to 342, but this is not a place that you want to be overly bearish, because at the end of the day, we have a long harvest in front of us. And the yield is going to be highly variable depending on when that corn was actually planted.
And some frost concerns potentially coming down the pipeline.
Yeah, I mean, I think that's what kind of broke the market here a little bit today. I mean, September right now is forecasted to be a little bit warmer. We all know that can change, but you can't rely on a frost for higher prices. What we need is we need some good sustained demand.
Absolutely. Jeff, let's take one more quick question here from Chris in Iowa. He said, when is the market going to trade on the crop we have, not the crop USDA says we have?
I think that's when the combines actually run. And I would just, caution, the first yield reports are going to be good. That's going to be your April, your May planted. You want to see the yield reports once we get 30 or 40% harvested. So it's going to take some time. This is going to be a long harvest. And yeah, it potentially has some chance that we could definitely move higher.
Jeff, tell me what's going on in the soybean markets. We had some positive trade news on Thursday, yet we finished down pretty drastically.
Yeah, that was a big move down. I mean, we were 20 lower after that development that, the trade delegation would be meeting. To me, it looks like maybe the weather turns in a little warmer. Soybeans to me looks like they could be hit harder with a frost, but if it's not going to come. But at the end of the day, I mean, it's just the demand is, it's bad right now. And we got to work through these things before we can sustain this move higher. But if the USDA does come out with a friendly number, 47, 46 bushels of the acre, we might take a move. But the next resistance up is at 890. That would be the 100-day moving average. That would be pretty stiff resistance.
If the USDA does address some of the yield concern in their next report or here moving forward, how much of a rally can we really have? We've still got this lack of demand from the Chinese. We've still got a huge carryout number.
Yeah, I mean, if you look at the corn market, the first area of resistance is 388 up to 393. But again, you have the funds that are built this big short position down here. If they're going to cover their shorts and potentially even get long, that rally can be pretty explosive. But you need to look at hedging any 20 or 30 cent rally.
In both corn and soybean markets?
Absolutely. Until we know, how long this trade war is going to last, rallies need to definitely be hedged, sold. If you do have to sell down here, look to replace it with a cheap call option out to March. in case we are selling the low down here.
Okay. What's the story, Jeff, when you look at the cotton market? Have we put a low in yet?
Well, I mean, for 5 weeks, the cotton market has traded sideways. 57-cent support, 60 cent resistance. If we get a close below 57, it probably opens the door down to 52. And then if we close above 60 cents, we'll run it up to 67. But again, 14-year high stocks in the cotton market. Obviously, we rely heavily on the export. U.S. exports a third of the cotton that's exported throughout the entire world. And China right now is simply just on the sideline. And China's consumption's down 20%.
Okay, so that's export demand, it sounds like, is really what's going on in the grain markets. Jeff, let's talk about what's going on in the meat markets. The live cattle contracts had contract lows, I believe, in October, December, and February.
Yeah,
what happened?
It was not a good way to end the week. The plant fire could have not happened at a worse time for the, it's never a good time, but, we were coming 6 months consecutively of a record number of cattle on feed. We had been staying pretty current as, beef demand remains robust right now. But yeah, it's not good right now. The funds are probably a little bit short this market, net short, looking for prices to move lower. That's the first time that they've been short, the fat cattle for like 15 years here. So I like the February contract down here at 106, in the April up there at 108. I think the winter months have no weather premium built into them, and we could definitely see a rally here in the next 5-6 months.
Okay, a weather premium is what it's going to take, though, to get that rally.
Well, no, I mean, demand remains good. I mean, this was a total supply-driven price decline. So demand has been good. So yeah, I like the February and the April contract there.
Jeff, what about when you look at the feeder cattle? Where are they headed from here?
They've acted all right. I mean, obviously they were pulled down by the sell-off in the fat cattle. If corn's going to put in a big rally here this fall, it could potentially keep the pressure on the feeder cattle. But there's a lot of gaps up there in the feeder cattle chart. And what we do see a lot of times in livestock is the gaps get filled. So, after harvest, we typically see a pretty good demand for calves, and I would expect that here again this year.
What about when you look at the cash side of things? It's been pretty weak in both the feeder and the live cattle markets. Do you expect that to strengthen here over the next couple of months as well? Yeah,
this week we took out the 102 support. Then we quickly traded down to 99 cents in the south. Up here in the north, we've always been carrying a premium. But again, I don't want to be too negative here. It is going to take time to work through these animals. But at the end of the day, beef demand remains robust.
Okay, what about when you look at the hog market? It seems that the demand is robust there, especially Chinese exports. We saw record shipments in July, yet prices haven't been reflecting of that. What's it going to take to see a little price action in the hog markets?
Well, I think it's coming. I mean, the Chinese, what they're going through is friendly every protein in the world. Obviously we got to get through this trade barriers things and everything. But the hogs, to me, you have the funds that are long, probably about 35,000 contracts. I like the hogs here. I think they can move higher. Fourth quarter here, domestically here in the United States, we do have plenty of numbers. I mean, we're talking about record numbers. But as these trade deals come online, the Japanese trade deal, that should give us a lift in the pork demand as well. So I like the pork here right now.
Jeff, you said we're at record supplies for pork, but you think they're going higher. How much potential do they have to move to the upside?
Oh, I think they could rally here $8 to $10 pretty easily.
Within what timeline? I'm going to lock you down.
Late fourth quarter. I mean, it's going to be dependent if we get the Japanese trade deal signed, which, we're hoping for next month. We also get the deal with the new NAFTA, USMCA here pretty soon as well. But I look for upside in the hog market.
Jeff, I'm going to throw in the dollar. You touched on it earlier. Obviously, that's a big impact in our export markets. If we do get some of these trade deals put in place, what's that going to do to the dollar and our export markets?
You know, I don't know how it will really affect the dollar, but trade deal is going to increase our exports drastically. I mean, right now, the exports are, you know, pretty much not very good. I mean, September 1st began the new marketing year, the 19-20 marketing year. Corn and beans, on average, are about 50 to 60% behind.
Jeff, I'm going to save the rest of that for Market Plus. Right. Thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Seeds or no seeds, search IPTV Market on Instagram and answer this week's question. You'll also find behind-the-scenes images from our producers. Join us again next week when we'll explore a family business that has been refining an essential ingredient for 7 generations. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.